You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Today is Tuesday, 4th day of June, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Sorry for the late start. Going forward, we're going to be streaming not only on our platform, we already stream on YouTube, and tomorrow, once I get all the kinks worked out, we'll actually be streaming live on X as well. So, at CFRN. That's all you have to type in to get the live stream. Hopefully tomorrow we'll get started. We did it a couple of years ago, and they changed some things, making it more difficult, but now they've done some things to make it simple again. So, this is our second live broadcast of the day. We do 2 every trading day. The first one is our live training room, members only, and those taking the 1-week free trial. If you haven't taken the 1-week free trial, go to mytradingiq.com. Top of the page, there's a link. 5-day free trial, no credit card required. Doesn't matter what day of the week or weekend or hour of the day you sign up for the trial, you will get 5 consecutive trading days, even if it stretches over a weekend. So then you get 7 days instead of 5. Now, you're not just getting access to the live trading room, but you're getting 5 days of access to everything that our passport holders have access to, with one exception, the members only workshop on Thursday night. Now, when the live training room ends each day at 11:30 a.m. Eastern, take a 30-minute break. And if there are no technical difficulties, we go live for the afternoon broadcast at 12 noon Eastern. We're running a few minutes late today for reasons I just mentioned. But now we're here. There's 2 different ways to join the afternoon broadcast live. As of tomorrow, there are 3. But the best way, just go to mytradingiq.com, scroll down the page to where it says afternoon broadcast. Click that link, fill out that 30-second registration form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. Now, the benefit there is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, but you still want to join live. You can. And there'll be days when you're busy, can't join live, but want to get caught up later. You can do that too. Talking about our YouTube channel, youtube.com/CFRN. Easy to remember. You already got the YouTube part memorized, so really all you have to remember is CFRN. Not only do we broadcast live every trading day on our YouTube channel, we also archive each and every daily broadcast. Currently, there are over 2,500 500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Just pick some days at random. Watch a little bit, fast forward a little bit, grab another day, do the same thing. You'll discover the thread of connectivity, the thread of continuity woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. Okay, we'll open with our daily devotion and a word of prayer as we do every day. Our scripture today, Psalm 30, verses 11 through 12. And we started a new topic yesterday, passion. Psalm 30, verse 11. You did it. I'm sharing from the Message translation. You did it. You changed wild lament into whirling dance. You ripped off my black mourning band and decked me with wildflowers. I'm about to burst with song. I can't keep quiet about you. God, my God, I can't thank you enough. Psalm 30, verses 11 through 12. A music producer once commented that in the world of pop, you can only really write 4 kinds of songs. I love you, I hate you, go away, and come back. I love you, I hate you, go away, and come back. That's it, the 4. Now that's an amusing yet astute observation. But gladly, when it comes to writing songs towards the God of all eternity, we have a whole different color palette to work with. When I talk about the reasons for God's worth and say there are 10,000 reasons for my heart to find, that's actually a huge poetic understatement. The reasons for the praise of God are so wide and wonderful that we could sing from now until forever and never run out of ideas as to why He is quite so worthy. Think about the world of nature for a moment. As of now, scientists have described over 1.7 million species of animal, plant, and algae on Earth. Mammals make up one of the smallest groups, with less than 6,000 members known. For insects, on the other hand, we're aware of about 1 million different species. And in all categories, there are more species becoming known every year. In fact, some places, like the depths of the ocean, we've hardly even begun to explore. And there are countless more species to find and identify. But let's stick for a moment to those 1.7 million species we know so far. I think we could safely say that every kind of plant, animal, or other living thing created by God is a reason for His praise. Next, look up at the stars. Scientists are now saying there are more stars in the known universe than there are grains of sand on all the world's beaches and deserts. So, right there, we have billions and billions more reasons to utter up an offering of praise. Next, we look to our own lives, the countless blessings weaved into our everyday existences, and the miracle of life itself. Think about families and social circles and provision in our lives, and we praise and praise, and praise again. Perhaps that's why at the end of Psalm 30, the worshiper says, "My heart may sing to you and not be silent. O Lord my God, I will give you thanks forever." The psalmist knows of a multitude of reasons why we should worship God, and he knows of not one reason why he should refrain from doing so. He can't think of a single motive why he should remain silent. The same must be true for our own lives. The worship of Jesus should be vibrant, creative, and colorful as we unfold our hearts in praise. There will be an eternity of reasons to adore and revere him. Join me in a word of prayer. Heavenly Father, we're thankful that you have turned our mourning into dancing. You've taken away our clothes of mourning and clothed us with joy. May our hearts sing praises to you without ceasing. We give you thanks forever. It's in Jesus' name we believe and pray. Everybody said, amen. Amen and happy Tuesday. Now, let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Currently, the Dow is down 58 points. NASDAQ is down 68. S&P 500 down 22. And the Russell 2000, man in the street, down 24. That's almost 1.25%. And in the commodity basket, crude oil down another $1 today, 98 cents, trading 73.26 last. That's a drop of over 1.25%. Gold down $23.40, trading 23.45.90 last, a drop of 1%. And silver back below $30, trading 29.64, down $1.13, over 3.5%, or over $5,000 per contract traded. In the Asian markets at the close, Nikkei down 85, Shanghai up 12, Hang Seng up 41. And in the European markets at the close, FTSE down 30, the DAX down 202, which is over 1%, the CAC down 60. So that gave us a mixed day in Asia. It was a red day for the UK, and so far it is a red Radio Tuesday here in the US of A. So with that, let's take a quick look here at job openings. Job openings fell in April to their lowest level since February of 2021, as the labor market shows further signs of cooling off from the hiring boom that followed the U.S. economy reopening after the pandemic. Now, you'll hear a lot of rhetoric about all these jobs that have been created in the last few years. No, it's just people getting their jobs back. Really big difference. Hang on one second. The new data from the Bureau of Labor Statistics released today showed there were 8.06 million jobs open at the end of April, a decrease from the 8.35 million openings in March. March's figure was revised lower from the 8.48 million open jobs initially reported. Economists surveyed by Bloomberg had expected the report to show 8.35 in April. The Job Openings and Labor Turnover Survey, it's called the JOLTS. If you ever wondered what the JOLTS stands for, Job Openings and Labor Turnover Survey, also showed 5.6 million hires were made during the month, little changed from March. The hiring rate held at 3.6%, unchanged from March. Also in today's report, the quit rate, a sign of confidence among workers, held steady at 2.2%. The decline in openings points to a slower pace of hiring in the months ahead. However, layoffs remain low for now, so perhaps net job growth will continue to be positive. We'll see. In other news, the U.S. economy is no longer shocking Wall Street to the upside. Economic consensus has shifted from forecasters chasing the data higher to scaling back levels of optimism as recent data shows activity cooling across a variety of metrics. This has dampened hopes that economic growth could unexpectedly accelerate for a second straight year. The economic research team at Goldman Sachs has been among the most bullish on the state of the economy over the past year. The firm has moved down its estimate for second quarter GDP to reflect an annualized growth rate of 2.7% from 3.2% on May 24th, amid weak spending momentum to start the quarter. Why is there weak spending? I think we talked about it yesterday. Everybody's credit cards are maxed out. And at the current interest rates, it's going to be real hard to keep your head above water if you're in that situation. Hopefully you are not. And one last piece of news. A group of current and former employees at artificial intelligence companies, including Microsoft-backed OpenAI and Alphabet's Google DeepMind on Tuesday, raised concerns about risks posed by the emerging technology. An open letter by a group of 11 current and former employees of OpenAI and one current and another former employee with Google DeepMind said the financial motives of AI companies hinder effective oversight. We do not believe bespoke structures of corporate governance are sufficient to change this, the letter added. Further warns of risk from unregulated AI, ranging from the spread of misinformation to the loss of independent AI systems and the deepening of existing inequalities, which could result in human extinction. We're going to go extinct. That's what they're saying. Now, whether you believe that or not, I challenge you to do this. Okay? I want you to go to wherever you listen to podcasts. And as you know, even though it leans a little to the left, one of my podcasts that I've listened to for 20 years, close to it. It was before there were podcasts, it was a radio broadcast. every Saturday on my local NPR, yeah, National People's Radio. It's called This American Life. So, it was broadcast live over the weekend on Saturday. Well, it's recorded and then broadcast, but you can go to the website, thisamericanlife.com. And most episodes, they're an hour long, but they're usually broken up into like 3 parts. You can listen to the first part if you want, but I want you to fast forward to make sure you get part 2, where it talks about artificial intelligence. And there is a platform that was available to the public, but it got so scary, they've yanked it. And it was called Code Da Vinci 2. If you have or don't have concerns about the power of what AI could do, really need to listen to this podcast, This American Life, the second story in the hour-long broadcast, where they actually use this Code Da Vinci 2, which you can no longer get your hands on. Well, you can get your hands on it, but it's just not open to the public. And I want you to listen to some of the things that this AI wrote based on questions they asked it. Then ask yourself, he said that people could go extinct. Is that possible? Listen to that podcast, This American Life, the most recent episode, part 2. Okay? It's an hour-long broadcast, broken up into 3 parts usually. You want to hear the second part. Warning, you may not sleep tonight. So, not much more I can say about that. But you owe it to yourself. I know a lot of people go, oh, I can't be that bad. Okay. Listen to that podcast. Listen to what that artificial intelligence has to say, and then see if your decision or your thoughts change. Logic 247, our 24/7 around-the-clock Emini alert service. We're now in week 305. Over the last 305 weeks, we've issued over 16,000, I believe it is 800, individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based on market structure, and a very simple process we teach all of our passport holders their one-on-one mentoring sessions. Last week, we ended up with 0% for the week. Possibly our best week ever. There may have been one other week where we had 0%, but at the maximum, there's been 2 over 304 weeks. We're now in week 305. Now, Valerie did this recap this morning at 7 a.m. Eastern. I've added additional alerts since then, so she'll update the recap this afternoon. But at the time she did the recap this morning, since the markets opened Sunday night, we issued 20 alerts, still waiting on the outcome of 6. They gave us 14 actionable alerts, of which 1, or 7%, would have been stopped out, again based on market structure and that very simple process that we teach all of our passport holders. Now, with the logic alerts, you get the entry price, initial target, additional targets or obstacles, and then the final trade to target. I explained in depth yesterday how you handle that report or those alerts when they come out. And pretty soon, you'll be able to write your own alert. You won't need Logic 247 because we're not using any kind of a crystal ball or magic wand. It's not a holy grail. It's simply understanding how to read the chart and understand what it's telling you. There's a story, like a newspaper, like a good mystery novel, but you got to learn how to read it. And the purpose of the logic alerts is to help you do that. Now, long before we had Logic 247, which we've had for 305 weeks now, our original alert service, Concierge Trade Alerts, we still have, but they're a little bit different. So with the logic alerts, you learn how to find the entry, the initial target, the additional targets. With the CTAs, now you learn, now this is your opportunity to put to use what you learned from Logic 247. Now the logic alerts can come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session and vice versa. So while a logic alert can come out at 2 a.m. or 2 p.m., CTA report is published once per session shortly after the Globex open. So we're in the Tuesday session, but the Tuesday session began last night at 6 p.m. Eastern. So 10 minutes into the open, all of our members and trial members received these targets. First thing you do when the report comes out is go to the 30-minute chart of whatever markets you actually trade. Make a note where price is at the time the report was published. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. BBC just stands for bull bear cross. It's the green line you see on all my charts. No matter what time frame, green line is always the BBC. Price crosses above that green line, we're bullish and anticipate higher prices. When price crosses below the green line, we're bearish and anticipate lower prices. Always relative to whatever time frame you're looking at. Now, this is where you learn to look left yourself and spot potential obstacles, previous swing highs, swing lows, and you learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Published the zone since December 14th of 2009, closing in on 15 years. Come out Monday morning at 6:15 a.m. Eastern. Once they're published, carved in stone for the entire week. They do not change in any way whatsoever. Other than that, just resist the urge to complicate things. As long as you know which way the wind is blowing, it's pretty simple. Reach your goal for the day. So let's have a look at where we are. This is the daily chart of the S&P. Yesterday, during the broadcast, we had a big red candle down to support at the BBC and the 24% fib retracement of the last leg up. Now on Friday, we got a 100-point bounce because we hit the 38% fib retracement. Yesterday, we had a big red candle, and then going into the close, it ran back up to resistance. We opened at resistance last night, and currently price is trapped between resistance, the step line, the BBC, and the 24% fib retracement. How we close today is very important. If we close below yesterday's low, then we're most likely headed back to the 38% fib. Okay. Now, institutional traders look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has to do with account size. They trade in such size that it literally moves price. So, no matter what you trade, whether it's futures, individual stocks, crypto, Forex, ETF, if you'll spend 2 minutes with the daily chart of whatever you're going to trade before you start trading, what you're doing is you're literally looking over the shoulder of the traders who move price. And by applying logic, and I don't mean logic 247, I mean actually logic, which over time just becomes common sense, you can look at any chart of any market and instinctively know what the next high probability move is. Okay, but that doesn't happen overnight. You got to put in the work, you got to show up, you got to ask the questions, you got to learn. Just like when you were in kindergarten and first grade learning how to read, you got to learn how to read these charts. And that's what we teach you. Okay. So we're off the low of the day. The high of the day is right at red and falling. But there's support right here. BBC. Okay. The green line. Bullish above it. Bearish below it. Based on whatever time frame you're looking at. And as you can see, the pullback holds more often than it doesn't. But eventually it trades through. As it did here, and then finally here. And right now it's holding as support. Remember, the pullback holds more often than not. This is looking weak. And that article I just shared with you, that news article, Wall Street, they've been extremely bullish. But even Goldman Sachs has scaled back and said, yeah, maybe we're not quite as bullish as we were. Doesn't mean the market can't go higher. You got to embrace all possibilities. But to logically know what the next high probability move is powerful. 16,800 individual handcrafted alerts. On average, 20% or less get stopped down on a weekly basis. That's because when I create the alerts, I apply logic. And because logic runs around the clock, that's why it's called logic 247. Okay, ES. Vertical line separates today, Tuesday, from Monday. Here's where we opened last night. We had blue and climbing overhead, and when blue and climbing gets directly above price, that's bearish because it's probably on its way to turning into red and falling. And so while the pullback holds more often than not, traded through here, and it held here, and it held here a little bit. But with this red and falling pressure, cracked. So we got a nice leg, plenty of room to get your goal for the day. Then a retracement. We didn't quite touch the BBC. Market was very bearish. But red and falling, we expect that to be resistance, and it was. And it sent price all the way down to the short target. And then we spiked the weekly trading zone. Buyers came in, drove us back up. But so far, this pullback has held. See, every one of these candles, even though they've spiked, and see this bearish cross? Whenever you have a bearish cross that leads to an extended move, first time price revisits that area will almost always be good resistance. So if you're wondering why price stopped there, Now you know. Resistance sends the market looking for support, which it found at the zone. Now we're trying to stage another rally. But keep in mind, you've got potential resistance here and here, and then here, and that should take you to the long target if the rally continues, and then you've got resistance here, this high from yesterday. Okay. All right. Plenty of room to get you go for the day there or there. Dow, here's where we opened last night. 10 minutes into the life of that candle is when CTA targets were published. And same thing happened. Pull back to the BBC held, and it held, but red falling. Took it below the BBC. We got a leg, we got a retracement to red and falling, just like on the ES, and then bang, we hit the target. Based off this low put in yesterday. Okay. Support will always send the market looking for resistance. When price drops to a weekly zone, we expect support. When price rallies up to a weekly zone, we expect resistance until proven otherwise. Now, blue and climbing is directly above price. That's an obstacle. And then you got an obstacle right there. You got a little bit of space to get up to the next zone. Russell. Here's the open last night. 10 minutes into the open, out come the targets. We're below the BBC, so we automatically expect lower prices. Blue and climbing turns to red and falling, and boom, down we go through the target all the way down to the zone at 2039/2040. Support sends the market looking for resistance. Price always reverts to the mean. In our case, the mean is green, and as I explained, it's called the BBC. See the pullback, whether you're pulling from above or below, it holds more often than not. Now what are we doing? Consolidating at a weekly zone. When price reaches a weekly trading zone, 70% of the time, this is what happens. 20% of the time, rejection. 10% of the time, the slice. Like this 30-minute candle sliced through that zone like it wasn't even there. And then price attempted to retrace back to the zone it sliced through, but it didn't quite make it. Then it continued in the direction of the slice. So when price encounters a weekly zone, only one of three things happens. Consolidation. Again, we sliced and retraced, but the market was so heavy, couldn't quite pull all the way back to the zone. In Q, here's where we opened. Sideways, down to the BBC. Are you seeing the similarities between the indices? I hope so, because you got the same story. Once we get below the BBC, what do? We drop right to the target. That's support. When the market finds support, it will go look for resistance. When it finds resistance, remember the pullback holds, more often than not, it will look for support. When price drops to a zone, we expect support till proven otherwise. When price rallies up to a zone, we expect resistance till proven otherwise. Now here we spiked the zone, but literally all three candles were still touching the zone. So it held. Now we've had several attempts for the NQ to rally today. From here, look how far we got slapped down. And then we got slapped down again. And then we got slapped down again. Remember, This was a huge green candle. So was this. So was this. Just like this. Will this get slapped down as well? No. Before I went long, I would wait for price to, well, it's in the logic alert channel. I think it's 1690. 18,690 to 700. That gives you $200 per contract traded. This is powerful resistance right here. Okay. And the first resistance came at the area of the bearish cross. Spiked it and failed, spiked it and failed. We had a series of lower highs. Now we've overcome this high. We got to overcome this one. Got to overcome this one. And we got to overcome this one. Rude. Here's where we opened last night. We're below the BVC, so we expect lower prices. And it did not disappoint. This one candle right here opened at 73.89. 73.90 and dropped to 73.60. There's $300 per contract traded in that one candle. So we consolidate along the target for a bit. And then we attempt to go to this week's lowest weekly zone. Didn't quite get there. Buyers have come in, bid it up. See how red and falling turned to blue and climbing? Now we're running into resistance at the short target. We need to break above. The logic alert out there is a break above that. Michael, is that you?
That is me.
Yeah, you just got to let me know when you're here. All right, guys, we will finish up crude, silver, and the euro. But right now, Michael's going to give us a recap of what happened in the live training room this morning. We'll go live on TradingView for 30 minutes. And I'll come back, finish the recap, and close it out with our good word for the day. Looks good.
All right. Excellent. Here we go. Good afternoon, everyone. Today is Tuesday, the 4th day of June. 4th day of June, 2024. Now, if you have not taken a free trial with us and you want to, go here to mytradingiq.com and right here, click on that purple button. When you click on the purple button, you will be, you will be brought to this page right here. All right, on this page, all that we ask for is your first name, your last name, your email, and your phone number. We do ask you to fill out these little things right here. They're just little drop downs. Little simple things. You just make a choice. Multiple choice drop downs. Down here, though, you do, if you want to, if you have a machine ID, you can provide it for us. NinjaTrader machine ID, not the NinjaTrader ID with the machine ID. And if you have TradingView login ID, provide that. Not an email, but a login ID. Okay. Should actually put that in the text. Not an email, not a NinjaTrader machine, not a NinjaTrader ID. Anyway, once you supply that, then we will be able to enable your indicators so your indicators can start indicating just like these. Okay. Now, the spreadsheet. Here we go. So we had a pretty good day today. We got the goal on the first trade. That's always good. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 4th day of June, 2024. We lost 18 on the NQ. We lost 2 on the Russell. We made 50 on the YM and 10 on the ES. Put us at plus 275 in the morning session. Today, it took 6 minutes and 1 trade to get to the goal for the day. That's what it looks like when you get a 30-tick trade with a $5 market with 18 contracts on. This is what it looks like last month. All these 2550s, all those 2550s we got last month were where we got it usually on the NQ. This morning, though, 2700s will be this month. We got it on the Russell this morning, I think. Was it the Russell? No, it was the YM this morning. We got it on the YM. Anyway, took a total of 13 trades this morning. So on the month now, we're averaging $375. And we're at $375 per contract. Over 2 business days, averaging $187.50. So it's a slow start to the month, but it's okay. On the year now, we're at $40,865, averaging $392 per contract per 2-hour business day. If you were to quit trading when you get your goal for the day, so far this year, you'd have only had to work 36.7 hours if you did it just like me. And if you had 1 contract per month, so far this year, you'd be on your 6th contract and you'd be averaging $1,256 an hour if you did it just like me. And if you started last year with 1 contract in January of last year instead of January of this year, you'd be on your 18th contract, which we started this week on our 18th month, 18th contract. And we are averaging $6,180 per hour. Okay, 613,000. That's a very good number right there. All right, let's get into the actual trades now. We had trades on all 4 of the markets. The YM is actually what we had the most trades on. The NQ is what we had the fewest on, which is really odd. But we'll go to the YM here, and that theory that I had does seem to be working out, sort of. Let's go here. All right, so our first trade on the YM was right here. We picked up 30 ticks profit on that very first trade. Next one was right here. We gave 10 ticks back. That put us down at 20. Then I think we got 3 ticks on that one, got us to 23. Then 7 ticks on this one, got us to 30 again. Then we didn't do anything for a little while. We got really flat in here. We didn't do anything for a little while. We shorted again. We shorted again over here. I got 10 more ticks to get us to 40. And then we had 1 more somewhere in here. I did get into the lesson plan, so I wasn't trading as much, but somewhere in here we had 1 more trade. I don't know where it was. We had 1 more trade. They got us 10 more ticks. I don't know exactly where it was. That got us up to 50. Yeah, we had a blue arrow there. We had a couple of bounces off the ribbon in here. They could have been valid trades. I don't know where it was. But during the break, and this is during the break right in here. That would not have worked out. That for me probably would have been a stop out. But it was a down close, the blue arrow on a down close. I probably wouldn't have taken that. The outer bands are flat. I wouldn't have taken that anyway. And that was it. So during the break, not a whole lot of action. We'll look at the Russell now. Look during the break, not a whole lot of action here during the break. I'll go back to the beginning of time though. Today, beginning of time in this business day. And here we are. All right, we had a couple of purple blue arrows in there that didn't do anything. Our first trade was right in here on the Russell. We picked up 5 ticks on the first one. And then this one right here, I did this on news, and that was a bad idea because I had messed it up a little bit. I bumped my stop to +3 in here. So my stop was at +3, but then I put on another order down here. And when I saw it, something messed up with my strategy and it didn't have a target on it. When I saw it right before the news came, I put a target on down here, like a 40 tick target. But that also put an order on the other side that I didn't realize. And when the news came, it looked like it skipped my stop. It didn't actually skip my stop. It hit my stop. And it gave me 3 ticks profit there, but then it gave me minus 15 ticks on the next trade, on the next thing that triggered in by accident. And so I ended up losing 12 ticks overall on this. I should have been profitable by 3 ticks, but because I messed with it, I ended up minus 12. That put me at minus 7 overall. Then I got 5 ticks back right here to put me at minus 2. And then we got into the lesson plan, and I wasn't doing any trading in there. Looks like I wasn't even in the lesson plan. I was looking at the YM. I wasn't looking at the Russell at all. So we had nothing else through there. Okay, now on the ES today. Let's go back to the beginning. Here we go. On the ES, our very first trade here on the ES, we stopped out minus 10. Then the next trade, I had the order on back here, and I had forgotten about it, and I realized it when it was down here at plus 20 ticks profit, so I trailed my stop plus 20. And we ended up getting out with 26 in profit on it. It did go a little bit more than 20, but we got 20. And that was those were our 2 trades there on the ES today. It was 12:57. I thought I was going to drag this out past 1 o'clock, but it doesn't look like I'm going to. The NQ only has a couple of trades. Usually the NQ takes 5 minutes by itself, but it only has a couple of trades today. So I don't have much going on with that one. Let me open this up and see if anybody has any questions out there in the YouTube stream. Dwayne, are we doing Twitter right now too? I know you had mentioned that yesterday. So on the ES right here, I didn't get any more trades here on the ES. I'm just looking at the break here. That was not a valid trade going into the weekly trading zone, and we had no more blue arrows here. So not much left there on the ES today. Okay, and now we'll jump into the NQ, and let's see on the NQ here. On the NQ, let's go all the way here and here. I only had a couple of trades on the NQ. It was kind of weird today that I only had a couple of trades on the NQ. I had all those trades on the YM. I don't really have much to show here on the NQ, but we'll start at the beginning and see what did happen. Okay. So the market opened up right through here, and there was a blue arrow there that worked out pretty well. A blue arrow here that would have been a break even. Now I went into detailing in a little bit different way today in the lesson plan. A blue arrow there that would have been a break even, a blue arrow here that would have stopped me out. A blue arrow here that would have been a break even, and only the first one would have been a valid trade. It looks like, well, looks like I got 2 ticks on that first one. I got 2 ticks on the first one, and then I stopped out on this one. That would be a minus 18, and that's where we ended with the NQ. Those 2 trades right there. There were some more here while I was in the lesson plan. There were some more blue arrow trades there, all worked out pretty well. And going through here, some more and more. And down here during the break, there were some nice ones right here during the break. Yeah, some good blue arrows here during the break. All right, so it's 1 o'clock. Now I said all of that to say this. On the morning, we finished with plus 275 with 1 contract. We were minus 18 on the NQ, minus 2 on the Russell, plus 50 on the YM, and plus 10 on the ES. Took 6 minutes and 1 trade to get to the goal for the day. At that point, we're up $150 a contract, right? $2,700 overall with 18 contracts. And we took a total of 13 trades this morning. So on the month now, we're at 375, averaging 187.50 per day. And on the year, we're at 40,865 with 1 contract averaging $392 per day. If you were to quit trading when you get your goal for the day and add 1 contract per month, so far this year, you'd have only worked 36.7 hours if you did it just like me. Only worked 36.7 hours, and you'd be on your 6th contract right now, and you would be averaging $1,256 per hour for those 36.7 hours if you did it just like me. If you started last year in January of last year, like I did, then you'd be on your 18th contract right now. You'd be averaging $6,180 per hour. Right, $6,180 per hour. All right, that's where you would be. Now, let's get back here. Now, one of the things I'll go over this. Some of you guys did not make it to the morning session. I know that, and so I did an explanation this morning about the arrows and the arrow colors. And when you're thinking about how the arrow colors relate to how far a trade should go, I was thinking about, how you get a pullback, and if you had a slingshot and you're looking at the slingshot from the top, we'll say these are the poles on the slingshot. You're going to pull here and a pull there. And this is your rubber band in between. Oops, hang on. This is your rubber band in between. The black arrows of that rubber band, they're just a slight pullback like this. Okay, that's your black arrow. So you expect the slingshot to just shoot it a slight amount. The blue arrows, I'm summing this morning's lesson plan up quite a bit, but the blue arrows pull back a little bit deeper, and thus you expect them to go a little bit further. All right, and they're consistent. They don't pull back so deep that you're worried about breaking the band. They're pulled back just deep enough that they should consistently move and give you, consistent results. So if you're not too greedy, then blue arrows, the blue arrows are my favorite, but then you get your green arrows. Now the green arrows pull back deeper, right? And because they pull back deeper, you expect them to shoot it a little bit further, right? But with the green arrows, there's always the hazard of them breaking because you pulled it back so far. When that happens, then almost always the next thing that's going to happen is a black arrow going the other way. You see that? My analysis of the way that the arrows work. The black arrow is this one. Don't expect too much. The blue arrow is the most consistent one, and you expect it to go a consistent amount. Good consistent amount gives you value most of the time. The green arrow usually will give you more because it's got more room to run. It's got more leg. It's pulled back a little deeper. It should go a little further. But you always run the risk of it snapping and going the other way. That was my analogy this morning. How does that work? You guys following that? Is anybody listening to me? Anyway, that is what I was looking at this morning. All right, so trade-wise, we're right here. We have a deep pullback right here, right? So I would not want to take this trade. In here, the context, the black got into the green. You don't want to take that trade. Now, I was testing a theory over here on this one to see if I had two contexts on, if we would escape these kinds of things in here. And it does look like it's done that for the most part. It does occasionally have one where nothing prints again still. So, but for the most part, you get some color in there in the context. That theory, I don't know which one of these I turned on and which one I turned off. Yeah, you see, I was turning it on so you'd have color in the context. Sometimes we get these spaces here where it doesn't print. That's what I was trying to do there. All right. Let's see. Does anybody have any questions about anything that I've done at this point, this juncture? If you do, I'm happy to answer them. If you don't, I'm just going to start trading again. All right. Coming in, so I'm going to erase all drawings. And we'll be looking for a short trade here on the Russell when it pulls back. We're looking for an opportunity to short that. We have one over here on the NQ. We're looking for an opportunity to short that. The ES is in a no trade zone, so we're not going to short that. Okay, that's what we're looking for right now. I see some people are watching out there in the live stream in YouTube, but I don't see any questions. Okay, if you have any questions, all you have to do is ask.
Nope, no questions yet.
I don't see anything out there. Nope. Also, this afternoon at 3 o'clock, if you guys want to go and watch this, we're having a webinar for TV trades. It's at 3 p.m. this afternoon. You can go out to targetviewtrades.com and sign up for it right here. Targetviewtrades.com. Sign up right there. Okay. All right. Now we're getting a pullback here on the NQ. We're almost there, not quite. As we come out of the overbought right here, because we haven't hit the ribbon, it's going to give us that black arrow on the NQ. Now this black arrow has a ways to run to get down to the swing low down here. So it's a decent black arrow. If you get it on a pullback like this right here, if you're able to jump into it on a little bit of a pullback like that, then that's what I just did. I jumped in on a little bit of a pullback. Now it could pull back and it hit the ribbon. It could do that. And if it does, I'm in at a good enough spot, so it should keep me in the trade, but it's got a long way to run to get down to the swing low right there. And I like the spot that it pulled back to. Okay. With respect to the move down that we had. It's not too deep of a pullback, and it's just about off the ribbon right there. So we need 8 ticks in profit to bump the stop to break even. It's going to get down to 60.75 right here, or 600.75 right there. It's almost there. Almost there. There it is. Okay, so the stop is at break even, and now I'm out of break even. I do think this is going to run, but I'm out of break even. It's probably going to give, it might give a blue arrow or green arrow now that I've gotten in and out of it already. It might actually give that other arrow, but I'm getting nothing. So what colors would Dwayne typically use? All right. What do you mean? When Dwayne's doing it, Gordon, let me just show you something I created for you guys. All right. I'm going to hit save on this and go out here to a 30-minute chart. Like this is the blue arrow that I was just talking about. This is what Dwayne uses. Okay. He's not using any arrows on this. Right? He's not using any arrows on this. He doesn't, I don't even think he applies the arrows. Do you, Dwayne? I don't think so.
No, I know where an arrow would print just by looking at price action.
Yeah. Yeah. This 30-minute chart layout that I have right here, you can have a copy of if you want. I shared this. I think I shared it. Yeah, I shared this out. So you guys can have a copy. I'll paste it right here, Gordon. If you want to have a copy of this in TradingView, this is what Dwayne uses. It's got the MA1, it's got the BBC, and it's got the black step line. Well, it's a black line. It's the equivalent of a black step line. Okay, if you want to put the slingshot in there, you can. The slingshot that Dwayne uses on DT Pro, you may or may not have access to it. You have access to the ultimate slingshot, and within the ultimate slingshot, you can turn some things on that will be similar to the one that Dwayne uses. Like we have an S3 cycle right here, and an S4 fast, which would be similar to the one that Dwayne uses. Okay, it's not exactly the same. The one that he uses is this one right here. So you see the cycles basically in the right place with respect to everything.
Guys, when we were going over the 30-minute chart of the YM earlier, I pointed out that previous 30-minute candle had blue and climbing overhead, so that it would most likely find resistance there. Look what it's done. It's now printed a red candle back down to the step line, which is potential support, and then it'll probably move on down. It overcomes the step line, and then we look for support at the BBC.
So here at the BBC, and then below the BBC, the prior support level right there, and then down there, and then down there.
Yep. True story. It's very
so
simple.
This is all on TradingView, and this is a 30-minute chart thing. So if you guys want that, you just have to go to that link that I just gave to you. Right? If you have access to the indicators, then you have access to this 30-minute chart as well. And you know that's what Dwayne's using. And the bigger picture stuff, if I bring up, this is a YM, my YM 30-minute chart is all by itself all the way over on the end. Yesterday it was, here it is. Okay, here's my YM chart.
Every chart I ever show, Gordon, is always a 30-minute chart. I execute with a range chart, but the 30-minute is my roadmap. It tells me where my windows of opportunity are, what direction I should be trading in, and then I execute on a 7-tick range.
So here it is, the same chart, same everything right here. Okay, you can see the bars are all doing the same thing. If I were to put this, if I were to create this on open, I have closed bars. I didn't really get the same value because it's not giving me the color, but you can see they're all in the same place. They're all showing the same information.
On the 30-minute, I do use candlesticks, as Michael is demonstrating here.
Right here.
But on my range chart, obviously I'm using range bars to actually execute the trade.
See in here, you can show the candlestick type in here too. And TradingView has actually made it so you can show candlestick bars on range bars as well. That's a fairly new feature. It's within the last year they came up with that. But as far as colors of arrows and stuff like that, you just don't have the same amount of opportunity in here. Like, to get an arrow at all, it's got to come out of the overbought or oversold. And so the last time we came out of the oversold was back here at 5 o'clock this morning. And then there was a drop out of the overbought at 8, another at 9, and another at 10:30. So it's got to be with the trend for those to be significant. You're just not going to get the arrows in here. If we turn all the arrows on, I don't think you're going to see any of them.
In the Logic 247 channel, there's over 16,800 individual handcrafted alerts, and every one of them is a trend trade based on the 30-minute chart. If we're above the BVC, it's long. If we're below, it's a short.
See, I did give a couple of arrows here that I was actually not expecting on the short side. I wasn't really paying attention to that. I was paying attention to this side. I was saying, okay, we're looking at long arrows right now, possibility for long arrows. It's got to come out of the oversold to give you anything on the long side. And it's not going to give you anything in here. Not yet today, anyway. Did give you a couple of shorts here in the pre-market. And they worked out to the point, it got down to here. Now, I don't know when it gave it, where your stop would have been. In here, you stop, on the 30-minute chart, your stop's going to have to be pretty big. It's going to have to be the prior swing high. Be up here. All right, so the arrow's not really made for.
Look at that green arrow.
Back here.
Yeah, that was quite the hoot.
But that's, if we go back to what we were talking about this morning, Dwayne, not using the arrows, but just using what the BBC is there for. How everything is based on the BBC and all that.
Mm-hmm.
When you get a break of the BBC, the first pullback you anticipate is going to hold, and it goes the other way. Breaks down below your first pullback, you anticipate is going to hold. Breaks above the first pullback, you anticipate is going to hold. So right here, it's gone kind of sideways, where the first pullback just pushed it sideways, and over here, the first pullback, it pushed it down just a little bit, didn't put in a lower swing, but right now it's just switched back on the other side, where the first pullback is holding right now, but it's got to get up above and close up above the MA1 here for this to really be a significant move. But that's what, when you're using the BBC, I was showing in the lesson plan this morning how the BBC, everything is based upon the BBC, all right? Everything works off the BBC. And you get the cross below the BBC, you anticipate it's going to hold when you pull back to it. You get the cross above the BBC, you anticipate it's going to hold when it pulls back to it. And that's exactly what we're looking at with this. Now, if we go back here to this, you'll see the same things, but in here, we have all the arrows helping you, because there are so many different opportunities in here. You have all these arrows telling you, okay, we've crossed up above the BBC, we've come back, we've hit the BBC, and now this is a good spot for it to bounce off the BBC because we're coming out of the oversold right now. That's why we have all these arrows in here to help you see the higher probability trades. Okay, that's what they're there for, to show you like this right here. You should have an arrow here. If we came out of the oversold, you'd have an arrow right here right now. But because we didn't come out of the oversold, you're not going to. If you get an up close on this and it pops out of the oversold, you will have an arrow. It'll be a black arrow on that one. Right? But that's why we have all these. You have the bullish cross to come back, you hit the ribbon. You have a blue arrow suggesting it's going to go up. And it did. And over here, you came back and you hit the ribbon, but you didn't pull out of the oversold. If you pulled out of the oversold, like I said, you'd have an arrow there too. Okay. And you see, in the slingshot pullback, this black one pulled back just a little bit, and it went just a little bit. The blue one pulled back a little bit further, and it went a little bit further. So now it pulls back and it hits the black line on the pullback, you get a green one, and you expect the green one's going to go a little bit further. All that same stuff that I just said a minute ago. If you use the colors, it was your black pullback. There's where it went to, right here. Okay, this was your pullback. This was your push. And then the blue one, this was your pullback, this far. And this was your push, this far. All right, so now, if it pulls back and it hits the green, if it hits the black line, if it pulls back deep enough to hit the black line, then that would give you your green one, which would be a deeper pullback, and you expect a bigger push as the trend builds strength. If it's going to build strength, that's what you'd anticipate. Okay. All right. Well, we want this to come down and bounce off the rip. Are there any other questions? Where's the, there it is over here. Okay, I don't see any questions coming out today. Not yet, anyway. We do have a higher swing over here. Now, this is the black arrow that I mentioned when it came out of the oversold. We had the black arrow. Now, a bounce off the ribbon right here is still a valid trade. Right? Let's just look at this a little more closely. If we look in here in the data window, the low of this bar right here is 655, and the ribbon on that one was at 654. Okay, so that didn't actually hit it. This one, the ribbon was actually at 655, and the low of the bar was 655. So this one right here did actually bounce off the ribbon. Now that is a valid trade by itself, even without coming out of the oversold. That's a valid trade. Okay, that one right there. The rules for that trade are not there. Sorry, the rules for that trade are right here. Trade rules. That is a long trade without the slingshot. Okay, it's without the slingshot because it didn't come out of the oversold. But the black line and the ribbon must be on the bottom and in the green, and price must touch the ribbon on the pullback. So that's what happened right here. Okay, right there. That typically means taking black and blue arrows at lower risk opportunities. Green is higher risk, higher reward opportunity. No, that doesn't mean that. The black is the lower risk opportunity. The blue is the highest opportunity. The green has, they all have the same risk. The risk is the same on all of them, Gordon. The risk is, well, whatever time frame you're working on. It's based upon the bar size. But the risk is the same. The profit opportunity is what's less. The black is least likely to continue the trend. All right. Whereas the blue is the most likely to actually meet the trend and continue the trend. And the green is the next. So it goes blue, green, black in the order of likelihood to continue the trend. Now, if the black continues the trend, it could continue the trend by a tick or two, but usually the black is so close to the prior swing high that continuing the trend it's not worth the risk reward, is not right. Whereas the blue, the risk reward is almost always right and better in your favor. And the green, the risk reward is almost always right or better in your favor. Right? The green is usually a deeper pullback. And so you're going to have a little more room for it to run, usually. But it's also the highest risk because you've lost momentum. You've lost the most momentum on the green one, on the pullback. Okay, in the scheme of things, when the market is running and it's running really fast, it's running like this and it's running really fast, and these legs down are getting smaller and smaller when it's running really fast. And then the market starts to slow down, the legs get a little bit bigger like that, and get a little bit bigger like that. And then when you get the green one, those legs can come all the way down here. So you've lost all this momentum here, but you have this much room to get to the prior swing high, which is what you anticipate every trade is going to do. So, you take that trade with that anticipation, and the risk is the same on this trade, same as this trade, this trade, this trade, this trade, and this trade. The risk is the same. It doesn't change per color of arrow. The risk is always going to be for the YM here on a 7 range, the risk is always going to be 10 ticks. It's just what you expect out of the trade is going to change based on how far back it's pulled. Okay. You're always expecting it's going to go. This is your swing high. You're always expecting it's going to exceed that swing high. So if it pulls back this far, then you got all that room to get to that swing high. A lot of times it'll bounce right there and it won't go any further. But most of the time it's going to exceed it. So you have this much room before it hits the first area of real resistance, and then you can exceed that. If you have a black arrow, then you might have this much room before it hits the real area of resistance. And if you have a green arrow, you might have this much room before it hits the real area of resistance. The danger with the green arrow is that you've lost so much momentum on that pullback that it's not going to make it back up here. That is a danger with the green arrow. Like this one right here, we're just hitting the ribbon right here. We pulled back, we just hit the ribbon back here. We're just hitting it again right now. We're oversold. So we haven't hit the black line yet. So it's not a green arrow yet. Now the pullback proportionally to the leg up. This is our leg up. Okay, so proportionally, this is a great spot for it to bounce right here. Be a nice blue arrow trade right here, if it did. Right, from 682, you add 8 to that. Be 690 is what you'd be buying. Oops, 690 be just like this. Okay, buy stop limit at 690. 8 ticks above the bottom of the bar. So the bottom of the bar is still at 682. So we're still going to end up close there at 690. Now 681. So we're looking at 689. Okay. Now the ribbon is at 684, but we're looking at the black line. The BB3 is at 679. So it can't go down to 679. If it goes down to 679, then it'd be a green arrow if it pops out of the oversold. Can you see that right there? 679, the BB3. That's the black line there. So we just hit the black line. Right now the black line is at 680 and the low is at, well, it's, I'm just going to cancel the trade. It's not likely to be a trade right now. Okay. So while I leave this up here, look how deep it's pulled back now. Okay. If I move this thing off, you can see the green line. I'm not the green line, but the black line has gotten into the context right there. That disqualifies the long trade. It said it's pulled back too deep. Leave this one alone. Okay. That's what it's telling you. That's the information that the indicator is given to you. Right, so now everything looks like it's changing direction. So you're in no trade zone here, 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 and you're almost in no trade zone. No, I'm sorry, you're out of the trade zone over here. You're almost in a short trade over here. Sorry, you're almost in a short trade over here. Okay. It is now 1:26, so we have just a few minutes left in here. If anybody's got any more questions, I'm happy to answer them. I didn't see any questions come in YouTube today, not yet. And didn't get anything here. All right. I am just looking at stuff from this morning. All right. So we pulled all the way back through the ribbon here. We're not getting any trades here. The closest thing we have to a trade is going to be right here on the Russell. We've come out of the no trade zone and it's pulled back to test the ribbon. I know it's not painted right here, but if we go here and go back to that, it should paint up for us. There it is. So this right here is not going to give us any kind of an arrow. You're not going to have a trade here on the Russell either. We're not in the overbought, and we are touching the black line on the pullback. So you're not going to have any kind of a trade there either. Okay. Yes, the disqualified trades is, no trade at all is oftentimes the best trade. Just waiting for the good ones to come along. And right now we don't have a reason to trade anything. All the outer bands are flat right now. Let's go over here and see what's going on with this NVIDIA. And turned on properly. The bias level. It's not showing the arrows where it should. Anyway, this is NVIDIA on a 5-minute. We had some opportunity today on the 5-minute. There. And Bitcoin, Dwayne was talking about a little while ago. Bitcoin is getting up near the high of the day right now. It's not too far from the high of the day.
If I'm not mistaken, I just got a pop-up that said it broke 71,000.
Looks like 71,045 is the high today. 71,045.
It's probably when I got the pop-ups when it hit 71.
It's good stuff.
What's ETH at?
All right. Ethereum, it's, go see. ETH. That is meandering. It's down to 38.10, 38.11. So
When
it
those,
is not high today, but that's
when those ETHs go live, and they're expecting them to go live sometime here in the month of June. That's probably when we'll see ETH hopefully break 4,000.
yeah. The high right now is 4,093. But it looks like it's poised to move up.
Yeah, we need to
charting.
break that, and that previous high needs to become support.
Yep. The way it's charting right now,
That's the all-time high right there.
Move up to, yeah, it is right there, that 4,300. But it should move up to here, 4,700. I know that's all-time highs, but that's when it does move. That's where it should go up to 4,700. Based on just basic charting stuff.
Yep.
All right. I have to wrap this up because
all right.
I have another meeting. So if you guys have not taken a free trial with us, if you like what you see and you want to take a free trial with us, go ahead to mytradingiq.com. Click on the purple button. There's no credit card required for the trial. All right. And no credit card required for the trial. You get access to the indicators, you get access to the room, you get access to one-on-one training, you get access to all that stuff. All you have to do is sign up. mytradingiq.com, click on the purple button, brings you to this registration page. No credit card required. Name, email, address, phone number. If you have Ninja, it gives you Ninja Machine ID. If you have TradingView, it gives you TradingView login ID. Josh didn't show up today, did he? He didn't. Okay. Yesterday, he was here asking questions. I made a comment. I might have annoyed him. Anyway, that's it. With that, I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. If you are ready.
I am. Recap of the morning session.
Today it took 6 minutes and one trade to get to $2,700.
Great job.
Thank you.
All right, guys, we were on crude, and we got that bullish cross right there. So we've taken out, we haven't closed above this high right here, but we're attempting to. So I think the alert I put out was in the logic channel was to be long 74.75 up to 85, up to 75 bucks, up to 75.30, 75.55, and 75.65 on the long side. It's in the logic channel right now. For those of you who have access, that's all members and all trial members. Okay, on gold, here's where we opened last night. Dropped to the BBC, the pullback held, but it couldn't go anywhere because it had red and falling overhead. Then we finally got back up to the zone where we consolidated, as we do 70% of the time. Then, heading into the London Open, bang, the writing was on the wall. Now, gold only needs to move $1 in price for you to get your goal for the day. It's candle opened at 2363.4. Let's just call it 2363. $400 per contract traded in that one candle. $400 per contract traded. Earn the right to trade 10 contracts. It's $4 grand. On the way to the target. If you stayed with it, and there was $1 in there for you. And then we hit the zone where we found support. See, on the way up, the zone was resistance. On the way down, the zone was support. And we dropped a little bit below. Okay. See this low from yesterday? There's that low right there. Boom. Support always sends a market looking for resistance. Pullback holds more often than not. This pullback held and sent us all the way down to the zone below at 2335/36. Support is now sending us looking for resistance. We're about to hit the BBC. The pullback holds more often than not. Whether it's pulling from below or pulling down from above. Pulling up from below. Now pulling up from below again. So you expect it to hold until proven otherwise. And just because it gets spiked a little bit, okay, as long as, I don't care how far it spikes it, as long as the candle is still touching the BBC, it's holding. It's when you get another candle that opens and closes above the BBC, now you know that it didn't hold. Like here, see this candle? Opened and closed below the BBC, the green line. This candle here was just part of the question, a pullback hold or not. This candle did not answer the question, but this one did. There, and there it went. Leg retracement, leg retracement. That's how price moves, always, in every market. Leg retrace, leg retrace, leg retrace, leg retrace. Can't find a chart unless you've got some chart that's just flatlining on you. That is how price moves. Price just doesn't move in a straight line. That's not how markets work. Silver. Here's where we opened last night. We didn't make it all the way to the long target, but we did. You only need 2 pennies. This candle here would have done it. Opened at 30.86 and ran up to 30.91. It's $250 per contract traded in that little green candle right there. You're above the BBC. You're above balloon climbing. The only thing you would do is think long. This candle opened at 30.88 and ran up 12 points to $31. That's $600 per contract traded in that one 30-minute candle. Then lots of action to the downside. Came down to the short target. Zone, consolidation, leg, retracement, leg. And now we're attempting a retracement again. Back to the BTC. And on the euro. That's where we opened last night. We ran right up to the zone. Now these are the zones that were published yesterday morning, and all of these zones are the zones published at 6:15 a.m. Eastern yesterday morning. And once they're published on Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. 70% of the time, consolidation. And you get below the BBC and you expect to drop to the next zone. Now, also, just so happens, back on Friday, there was a bullish cross right there. And when you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. And boy, was it. Now, we've got a bearish cross up here. Price is above the BBC. We have blue and climbing. So it's reasonable to expect that price may move higher. In fact, here's your resistance right here. At the bearish cross, and then at that top of that wick, then the zone. Come back and look at it later today and you'll see that it either probably stopped right there or there, or it made it all the way to the zone. On the daily chart, one last look, we're still pressed up against red and falling. We've bounced again off the 24% fib retracement of the last leg up. Last leg up is the low of April 19th to the all-time historic high of May 23rd. We caught a 100-point bounce off of the 38% fib retracement. And now everything's just pinched up right here. And again, if you missed the first part of the broadcast, shared an article. Wall Street is losing its bullish enthusiasm. We lost ours a while back. To become a member, go to mytradingiq.com. If you have questions, call us at 949-42-EMINI or send an email to support@cfrn.net. When you become a passport holder, you have 2 hours of interactive live training and trading every trading day. 2 hours. On top of, now by interactive, I mean you're watching, you're trading along in your demo account till you qualify to go live, and you're asking every question that pops into your head. That's how you learn. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. They buy indicators, they buy oscillators, they buy cherry-picked video series, blah, blah, blah. But none of that's a replacement for a living, breathing teacher who will answer your question as soon as you ask it. How many times have you been reading a trading book and wished you could ask the author a question? How many times have you been watching some trading video that perhaps you bought and you wished you could ask the person behind the screen a question? They're long gone. This is the way to learn. Trading is not easy, but it can be simple. Along with 2 hours of group trading and training every trading day, you have access to one-on-one private mentoring, no additional charge. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Futures, the stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over, again and again, as I've just shown you over the past almost 2 hours. mytradingiq.com, 949-42-EMINI, support@cfrn.net. Also, when you become a passport holder, you get the Logic 247 alerts, which teach you how to read the chart. Concierge trade alerts, weekly trading zones, Everything a trader needs, all under one roof, one low price. MyTradingIQ.com. Okay, good word for the day. Now, there's so many parallels between life and trading. So we're going to spend a couple days talking about getting beyond the guesswork. Gordon, if you have a question on that, just send an email to support@cfrn.net or call 949-42-EMINI, and Valerie can look you up in the computer and answer your question. And she can also explain to you how you can get upgraded and become a passport holder. Okay, so for the next couple days, we're going to talk about getting beyond the guesswork. Now, in life, there's a whole lot of guessing, and 9 out of 10 traders are just guessing. But we're going to talk about life. Philippians 2:13. For it is God which worketh in you both to will and to do of his good pleasure. Remember the childhood game, Pin the Tail on the Donkey. Winning in that game was a stab in the dark process. It was kind of like the stock market leading up to the year 2000, the dot-com bubble. You could literally throw a dart at a chart, at any company that had anything to do with computers, technology, internet. You could plaster them all over the wall, throw a dart, boom, and make money. We all know those days are long gone. And for many of God's children, determining his will and purpose for their lives amounts to a similar method. It doesn't have to be that way. Here are some scriptural steps that take the guesswork out of life. Number 1, commit yourself to obeying God's will. Now, in order to obey God's will, you've got to understand God's will. Understanding God's will is impossible until you commit yourself unreservedly to doing it. Any desire to retain your own will blinds you to his. You don't need a detailed map. It's a journey of faith. Be confident that God loves you and wants only the best for you, and that when you submit yourself to him, Romans 12:2, and be not conformed to this world, but be ye transformed by the renewing of your mind, that you may prove what is good and acceptable and the perfect will of God. Number 2, listen for the shepherd's voice and trust it. Jesus doesn't leave you alone to figure out his will for your life. He is our good shepherd. And in John 10:3 and 4, he says, and when he brings out his own sheep, he goes before them, and the sheep follow him, for they know his voice. Note those words. They know his voice. With time and experience, you will learn to know when God is speaking to you. Like Abraham, who submitted to God's will without knowing where he would be led. You're called to surrender your will without knowing where God's going to lead you. You have to trust him. Faith. Now, in the Bible, we hear faith compared to something as small as a grain of mustard seed. The mustard seed is one of the smallest seeds. Think the smallest. But it grows into a massive tree. Now, why would God use that particular reference? Seed of a mustard tree. Well, here's the deal. Faith is simply this: the absence of doubt. You can preach, you can teach, you can memorize every scripture in the Bible, but when the rubber meets the road, if there's that little voice inside of you that really questions, is he real? Is this real? Is he going to hear my prayer, answer my prayer? See, you only need the tiniest amount of faith, the size of a mustard seed, is equal to the absence of doubt, which is a huge thing, because we're all naturally filled with doubt. So people say, I want to have more faith. Well, in order to have faith, you got to get rid of your doubt. So whatever causes you doubt, then you need to go to the Bible and you need to study. I mean, you got so many tools available online today where you can just literally type in, I have doubt in this area of my life. What scripture should I read? And you'll get bing, like that. Now, it says in Revelation that in the end days, information will travel to and fro, sort of like lightning. Okay? Not have that today. I mean, remember when you were a kid and you wanted to learn something? First you had to get mom to take you to the library, and you had to search through all these books, all these shelves of books. And I still like libraries, and I enjoy sometimes sitting down reading a physical book. But our generation has basically all the knowledge the world has amassed since the beginning of recorded time at our fingertips, a few keystrokes. Now, keep in mind there's some fake news out there and some people who are maybe too loosely wound or too tightly wound, so you got to use spiritual discernment. But I think you get the idea. God promises wisdom, insight, and understanding, not just to the spiritually smart, but to any person who lacks wisdom. That's James 1, 5 through 6. So today, in part 1, believe that his wisdom is yours. And we'll pick up tomorrow with part 2. You're very welcome, Gordon. All right, guys, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.